your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look here at the Dow Jones E-mini. We were in this trade here from right here all the way down here. We put our stop above yesterday's high here, folks, at 383.2340. I think that was it, and that's moving up. In fact, it's almost made a new high on the day with the Dow Jones being up on the day. You got the NASDAQ went all the way down, and of course I posted that it made a 382 retracement on the daily chart here today, so there was nothing bearish about that. If you waited for that, there would have been a pretty good buy. That's the good news. The bad news we have to take care of right now. So we're going to get this out of the way, and we'll start out here with the corn. We really thought we had something special going on in corn. Hold on one second here and get this out of the way here. And there's where we are. We were buying it yesterday here at 471. That was the 50%, and they rallied 4 cents last night, but then it gave it up. So you've taken a 4 cent loss in this of $200. So what we'll do is we'll wait for the next buying opportunity. But that was a good buy, a friendly hello, and a good buy. Anyway, that's out of the question that you have to be out of it, and we'll just wait to see what the next one. We got a lot of work to do over the weekend to prepare for this. Like I mentioned many times, the weekend of May 31st has historically been a major bottom in beans and meal and corn and stuff. So we still haven't given up hope. The other one that we took a small loss in here was the December soybean meal. This sure looked good last night, but by golly, like the old trading god said, remember we were buying this down here, right there at 63.90. It went down, didn't quite get our stop, and then rallied $3. And it looked like it was going to be really nice. But then there's nothing I can do in the middle of the night. As you can see, this was very, very early in the morning at 5 o'clock, and most people are not sleeping at that time. But if you were looking at it just by the ABCD, you'll notice we did an A, B, C, D pattern right there, and it was most probably right at the 786 is my guess. Yeah, there it was right there. That was the high. There was your ABCD. And then, of course, we did get stopped out of that for a $300 loss. So all in all, you win a few, you lose a few. But that's the way trading is all about, folks. I'm not going to give you all the good stuff. I got to give you the bad stuff, too. But let's get back to the good stuff. If you remember yesterday when we were on the horn, we were talking about the daily chart here of our good friend crude oil. Okay, this was 2 days ago. Yesterday we talked about that, and market was going down. It looked like it was never going to rally, right? But what would he mention to you? We said pay attention, because you're most probably going to get a really nice 382 rally sometime overnight. So if you put that little marker up and watched it, there's your chart. Now, where would that 382 be? Well, you'd have to start. I know the answer to this, folks. From that high to that low, comes in to the exact tick, actually within one tick of the exact number. And then after breaking, it did it again. It went from the high down to the low. He went right to the 382 again, and still there at that particular time. Now, that doesn't always work this way, but when we tell you to look at it, pay attention to it, because they're only right about 62% of the time, but when they're right, they pay megabucks, and that's what you really want to try to do. This volatility that we're having here today is really quite spectacular, and I'm looking forward to some really, really exciting stuff here these next few weeks. I said from the beginning of the year, 2024 is going to be one of the most volatile years in all these markets that we've ever seen. But look at this. We were down 10 days in the Dow Jones and in the S&P. And by the way, speaking of 10 days, it was 10 days ago we had Stan Harley on the line, and he said, it sure looks like this market is topping back there on May the 20th. Well, guess who our guest is today? None other than Stan Harley. Okay, now let's move on here. We've covered the meal. Let's get into the, hold on one second here. We have to take care of this other one here. Regarding the bond market, we switched over to the September contract in bonds now. Let's get this over here. Okay, now yesterday we had an order here in the bonds here at 16, and that lost 8 ticks. So there's nothing went a lot higher than that. So there was nothing you could do. There was your 382 right there. There was one of them that didn't work. It looked like it was going to be perfect, but well, it didn't look like it for very long. But the largest that ever went against you, your stop was always 8 ticks, which is $250, because bonds are so big with volume and everything. You can risk 8 ticks in bonds if you follow the numbers. Just to show you, I mean, this is just a 13-minute chart, but just since we're talking about this, now you can't trade all these, but look at this. From your low that you made right here early in the morning, okay, till the low that you made here this morning, early in the morning, right? This is at 3:30. This was 4:30 in the morning, 5 o'clock in the morning, New York time. If you mark that off to your high, you'll see that, where is it? Right here. Look at that. With 2 ticks below the 3 ticks below the 382. You can look at this mini head and shoulders pattern right here, folks. Very small, but that was telling you it wanted to go higher, and that's how that probably works out. Okay, now the next one we want to look at here is the gold market, because I thought for a minute we might have something moving today, because we had a big move in gold. There's our move that we had today. You see there was your 382, all right, at 74. The high was 82, so that was been a very nice trade. You also had a double ABCD pattern in there also at the same time, and you can see it came down quite a bit. What I was watching right before we came on the air here was the fact that we had this big drop. Get this out of the way here. That we might have a 382. And since we've got 3 hours to go, watch this, folks, because this could be a really nice one. There's your high up there at 82. You drop $40, and now you're looking at this area right here. And if that comes in, you've got a spot here. I don't know if this is going to be a low or not, but if it is, that's what you want to be watching. You want to take a look at that, and you'd say, there's where you want to be watching here at 2361. That would be a good sell, and with a stop up here at around 2366, risking about $5 in gold. We're trading the August contract now. As you can see up here, we are definitely looking at the August contract. And finally here, this is the one that I'm incredibly bullish on, but I'm now out. That is this is what was a little discouraging last night. You see, we had a perfect ABCD here yesterday. Let me just get this up here so you can see it. There's your A leg right here. I'll just mark it off. There's your B leg right here. There's your CD leg, came in right about here. So that was at 91. This was 90 and a half. We rallied right up to the exact 382, folks. 15 cents. It rallied 15 cents, and boom, down it comes. Not a good sign. Tells us that we're heading lower, and that's what we want to be waiting for. Get your basket ready. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this is the 4-hour chart of the British pound. And if you remember here the other day, right back here a few days ago, back on the 28th, we sold it right up in here. And we had a nice sell-off right at this level. This would have been your first profit objective, which would have been $600. We had another chance today. You can see at another ABCD. Let's walk this through for our new members here that are listening for the first time. There's your AB leg. There's your CD leg. There's your selling area right here. Now it's backed off this much. Now we're looking at a 4-hour chart here. Now when I do the daily things, every 2 weeks, during June, I will be doing one on the 10th and another one on the 24th, live trading. And let's try it again. It's the 14th and the 28th of June. So we'll watch that. But anyway, after we've had this, the market comes down. And if you took your profit, you had a chance to get the same pattern again. This is a 4-hour chart. So let's just slip down to the 60-minute chart. You'll be able to see it quite easily here. There it is. We can blow it up, and then we're just going to walk through what we've been watching at. Now, here was something very interesting. Remember, after a big trend like this, what do you want to look for? You want to watch for that first 382 retracement, folks. Look at that. Goes right to it, and then bang, down it comes. All right, now, what we've done now, we've completed another A, B, C, D pattern here in the British pound today. There's your AB leg right here. There's your CD leg right there. Oh, look at that. How accurate do you want it to be? My goodness, looks like it's pretty much spot on. And if you drew the ratios in so you'd be able to see it easily, you'd be looking at right here, which would be right at 707, which is the square root of 2. Folks, I don't use the square root of 2 because the difference between 0.618 and 786 to me is insignificant. There's one commodity, though, that really goes with 707 and 1.414, and that is corn. Dr. Ruth Miller, who was the lady that got me started looking at the Astro stuff back in '86, proved to me that, boy, that corn really follows a 707 and 1.414. So keep that in mind when if you're ever trading corn. I never say much about it in respect for her, but it's she wouldn't care. She shared everything. She really did, and she shared a lot to a lot of people, and was very, very generous. Lived to be 96, and she still had a soybean position on when she passed away, and it was profitable. They didn't know that she had a position on for a week, and it still kept going up. So that was sort of a big joke in the family. Okay, by the way I met her, she's from Terre Haute, Indiana, where I was where I was raised. I was born in Clinton, but she was a professor there at Indiana State University. But her son and her husband, John and Tony, not Tony, John, and what is his last name? Oh my gosh, senior moment, Bobby. They had a lot of acres, 1,900 acres of corn and soybeans. And when I was at Drexel, I hedged those products for them from 76 all through 82, and then I went to the floor, and then I made contact with her later again in 86. But anyway, tragically, her son passed away just shortly after her husband passed away, so she remarried and moved to Florida. Why am I telling you this is waste of time? I'm very sorry, but it's important to me because it brings back lots of memories. Okay, if it gets it back above here, there's something wrong here, folks, because you had this is only 40 pips, but 40 pips in the British pound is a lot of money. Well, it's a big move in the British pound. You can see it doesn't move that much, so 40 pips is pretty significant. Okay, now let's move on to the next one that we want to cover here in the foreign exchange is the euro and the dollar index. Both of these are very important, so we want to come down here and we will look at the dollar index first, which is right up here under the D's, A, B, C, D. Okay, here's the dollar index. This should be backing off a little bit today. It backed off, but really very, very little. Here's the daily. You can see it came down and nearly matched this bottom. Go down to a smaller time frame. We'll go to an hourly. See if we can find a nice little pattern here. Well, here's one right here. In the there's two of them we could look at. Well, in fact, there's more than that just over the last few days. Now, remember, it's better to trade the euro than the dollar index because it is really liquid compared to the dollar index, but the euro is 53% of the dollar index, so these patterns work. Here's your A, B, C, D leg over 3 days. There it is right there. There's A, B, C, D, and it drops a lot, doesn't it? Whoopsie daisy, that's not right. And here's the other one right here. We have another one. This is a small one, but remember, this is an hourly chart. This gives you two things to look at. One, you have your first low here. You have a strong up move. Oh, stop the music. You have a strong up move. You want to watch for, guess what? The first 382 retracement, and there it is right there. We'll move that over. It comes in at 0.41, which is very close to 0.32, and then it explodes up and makes a new high. Then what happens? You have a big breakdown. Look for your 382 on the way back up. There it is. Where's your ABCD come in? AB equal CD. This is the thing you want to trade if you're new to trading, folks. Trade the euro. Get used to trading that, because I can tell you with 100% confidence that if I took everything off this chart, I mean everything, just everything like this, and even took off the price so nobody could see what this is, nobody in God's green earth, and she knows it's green, can tell you what that is over a 60-minute pattern. That repeats so many times. The problem is that most people don't take the time to learn how to do it. But if you did it with that, you'd certainly be far better off. So let's take a look at the euro since we were just talking about that. Get this up here. Where are you, euro? You're up at the top end here. There we go. Let's just look at it on the hourly, just like we were doing. You're going to see the same ABCD patterns, but they're going to be upside down. And that's exactly what you were looking at right here. Here's the one on the downside. Let's just move this over like this. There's what we were watching. There was that 382 after the big move. Up right to that level right here. And hold on just a second. I'm going to sneeze, I'm afraid. Allergy season. Oh, hope I get out of the way. It actually goes to the 50% level, but the difference here is only 6 pips, which is $72. But when you see that, that gives you your ABCD to the downside right here. Okay, and there's your low right here. You could buy it there, and guess what this is on the way up? A, B, C, D, and that's exactly what it did. A, B, C, D. My old friend Mark Douglas was here with me now. I'd hear him say, AB equals CD. He always made fun of it, but he always made money with it. Not always, but a lot of the times he did. And we joked about it a lot, that it was so easy to use. And he said, I don't know why you teach people to do that. He says, because it's going to be too important. And I said, Mark, there are people out there that you could show them the Holy Grail, and they would find a way to tell you that it didn't work. And I don't think there is a Holy Grail. But, you got to find things that work, and they do work. But it takes time to learn to do these patterns. And there's little variances, like when the market explodes out of here. When it explodes out of here, it's not going to stop there. We already know that. It's going to stop in a 1.27 expansion of that. So if you just took that and measured it off, you'd be able to see. And we got Stan Harley in the house, so stay with us. There it is right there. We'll be right back, boys and girls. Stay tuned.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks. We're talking with Stan Harley, who was on the air about the 20th of May here and said, I think we might have a tradable top in place. Does this qualify? 10 straight down days? Great call, Stan. Great call.
Yeah, I think we probably have an intermediate high in the rearview mirror, and the trend is probably southbound for about the next month. That's what I think.
It's pretty crazy for sure. That's for sure. What are you showing us today, my friend?
Well, let's take a look at some charts, shall we?
You got it.
What I thought I'd do is start with the big picture here, and this is kind of a review, but it's my theory, my working thesis, that we are in the process of making a long-term secular market peak. We're not there yet, but we are getting close. What I've done here is I've looked at yearly data going all the way back to the very first day of trading in Amsterdam, the Netherlands, back in 1602, when the Dutch East India Company was founded. And
wow.
This may sound a little bit repetitious for folks who've seen this a number of times, but I'll repeat perhaps for the new folks. It's my theory that the vast majority of market cycles and time counts that define the time periods between highs, between lows, can be defined by Fibonacci numbers and, more importantly, Lucas numbers. I actually look at three things. I look at Fibonacci numbers, I look at the summation of squares of Fibonacci numbers, and I look at Lucas numbers. And I'm going to emphasize the latter because I think that's the most important among the three. But take a look at this chart. This is, each bar represents 1 year of trading, going back to the year 1602. And what we saw is the very first high in Amsterdam occurred in the year 1649. Which was 47 years from the commencement of trading. Well, I've got a little table up here in the upper left-hand corner. I've got the Lucas numbers, 18, 29, and 47, and they're ×2 and ×4 multiples. And kind of put those in the back of your mind and look at this chart and notice every single high, every single one has occurred within a year's time or two of a Lucas number, or it's ×2 or ×4 multiple, every single one. So the subsequent high occurred in Britain in 1720. That was approximately 72 years, which is Lucas 18 ×4 from the 1649 peak. The next high in the USA occurred in 1835, and that is Lucas 29 ×4, which is 116. The next peak in 1929 occurred 94 years later, which is Lucas 47 ×2. And it's my belief that Lucas 47 ×2 again, which equals 94, brings us to the present time frame and suggests the likelihood, the very compelling likelihood of major market peak. This, by the way, is a synthesis of the Dutch market, the British market, and the American market compiled by the Foundation for the Study of Cycles. When I take this year 1602 and I add all of those numbers that I just spoke of, in other words, 47, 94, 188, 94, and 94, it lands ideally on the year 2025. Here we are, 2024. So my message is we are in the heart of the envelope from a long-term perspective. Let's drill this down to the monthly data. And what I find again is good old Mr. Edward Lucas comes calling once again on the monthly chart. It'll take a little time to go through all of them, and I won't. But one can note that all of the major pivot points on the monthly chart have occurred at Lucas numbers or their multiples. Every single one, just like on the yearly chart. And if the pattern continues, that suggests, and it's a little bit off the page here, but I'm looking at November 2024, which would be 36 years from the prior peak, which was about Lucas 76 from the peak that preceded that, and so on.
Did you say November 2024?
Yes, sir, I did.
Is anything happening in November 2024 that could be significant?
I don't know.
Besides the election. Oh boy, that's a.
Well, there are two things that occur within a couple of trading days of each other, which I think might be it, Larry. We of course have an election on November the 5th, and boy, anybody's guess on that one. It's a close call, and of course the events of the last 24 hours might or might not play into that. I don't know. Not going to go down in the politics hole here. I'm just a technician. But we have an election on November the 5th, and we have a 2-day Fed meeting also on November 6th and 7th. So and my work suggests, boy, right there, right in that neighborhood. Wow. So which of those two events, or a day or two later, that's 6 months away. I'm not going to hang my hat on that one. But I think right in that time frame is the technicals. The Lucas numbers are arguing very strongly for a major market peak in that time frame.
Wow, that's really incredible. That's a beautiful chart, Stan. You did great work on that, my gosh. And getting the data from going back to 1600s is not an easy thing to do. Thankfully, the foundation had some data that they share with people, so it's really great that you're able to get that and show it to us. Please continue. We've got a lot of things to look at.
Music plays. If I please interrupt,
I'll let you know. They give me a little heads up on that, and I'll let you know. We've got plenty of time. We've got another 2 minutes, so go right ahead.
Okay. Well, let's drill this down to the weekly chart, shall we? Going back the last 40 some odd years. And again, Mr. Edward Lucas comes a calling once again. And let's start with the peak that occurred in the year 2000. And let's work backwards and forwards from that date. Here's my mouse cursor. And if we go to the left in time, well, the crash low in 87 occurred about 644 weeks. 644, of course, over here on the left, I have the table is Lucas 322 times 2. Now let's count forward in time to the right. The high in October of 2007 occurred again approximately 398 weeks later, which is Lucas 199 times 2. The subsequent peak in 2015 again occurred Lucas 398. The subsequent peak in February of 2020, the COVID top, and it had nothing to do with COVID, by the way, but that's what we all call it, was within 2 weeks of being precisely 246 weeks, or Lucas 123 times 2 from the prior peak, and then so on. If the pattern continues, the next double Lucas count, which is Lucas 76 times 2, which is 152 weeks, would suggest right around November 12th, plus or minus. Well, oh my gosh, that kind of dovetails back to my earlier charts of about a November 2024 high. So wow. The yearly, the monthly, and now the weekly are starting to present a very compelling case, not the certainty, but the compelling case for a significant high, a secular market peak occurring this November.
Can you stay with us?
Absolutely.
They're passing the hat. We'll be right back with Stan Harley, folks. Thank you, Stan.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, It has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Stan Harley. Stan, please continue. We've had several requests since we're on the line. Do you see anything coming up in the next few days?
I do. Let's drill it down here and let's take a look at some of the shorter term stuff. And maybe I can help folks out with that. This is a weekly chart going back a few years, and I've shared this with you and the viewers in the past.
Yes, you have.
Still no change in my views. I've been saying, as you know, for several months now, to look for a primary cycle low in the latter part of June. I've been saying June 24th. Now I'm kind of moving it to maybe the 28th. But that last week in June looks mighty ripe for what I think will be a low. And has nothing to do with fundamentals or politics or anything. It's just plain old garden variety market cycle.
Okay, we got a question from a cheap seats here in Tucson, Arizona. Can you tell us what time of the day on the 24th it's going to be, Stan? They asked me, so I have to ask you.
You're a funny guy, Larry.
Yeah, well, I have to. I trade commodities for a living. You have to be funny.
Absolutely. But this is what I call the primary cycle, and these purple lines denote the dominant lows on the chart. This cycle it's an accordion. It expands and contracts, but generally it tends to recur at a nominal rate of about 33 to 34 weeks. That is the central tendency of the data series. That is not the average. That is not the median. It's what's called the central tendency, which is a different measure of how I don't want to use. It's not the average. It's not the median. It's just another measure of a cycle or any type of data stream's evolution. Okay. And my work suggests right there towards the end of June. All right, let's look at the daily data. Again, this is a kind of a repeat of what I've shared with you in the past. On the daily charts for the Dow, the S&P, the NAS, the New York Comp, the dominant cycle has been coming in at 53 trading days. It's not always 53. Sometimes it's 63. Sometimes it's 43. But the central tendency of the data series on the daily chart is 53 trading days. The last one occurred on April the 19th. The next one is due, by my analysis, right around the week of June 24th. Right around the 28th is where I think is likely to occur. Why do I say the 28th? Well, let's take a look at this chart. This is right through just a few minutes before we went on the air. And this is a chart of the S&P 500 going back to January the 1st. And what I find interesting here, all of the pivot points, every single one from the high that occurred back on March 28th, line up pristinely with the major Fibonacci ratios of 0.236, 382, 618, and then I'm projecting into the future 764, 854, and 1.00. So let's look at the high that occurred on March 28th. That's my genesis point, the 0 point. And then the low that occurred on April the 19th is what I'm calling the 0.236 Fibonacci ratio point. Then 382 lined up with the low on May the 2nd. 0.618 aligned with the high, the all-time high that occurred on May 23rd. I plugged those dates into a spreadsheet, and I've already pre-populated them with these ratios because I do this all the time. I do what's called a regression analysis, which is a mathematical technique that finds the best fit to the data series, crunches out the numbers, computes an equation, and then I use that to project into the future. And that tells me if this pattern continues, to look for a potential trend change around the 6th of June, which is about 4 trading days from now, and another one, oh my gosh, right around June 28th. Okay. So what I think is likely to occur, we're going to get a little bounce here. It's going to be short-lived, but I'm looking for a low around June the 6th and a subsequent low around June 28th. In the very, very short term, I've noted that there's a cycle on the hourly charts of about 27 to 29 hours, approximately 4 trading days. So every 4 trading days, give or take a couple hours, we've been making nice little lows on the chart. Well, if you take the low that occurred this morning and you add about 27 to 29 hours, you're going to get June the 6th, late in the day there. And then do it out about another 4 times, and you're going to get late in the day on June 28th. So that's something that I'm tracking. So you asked me earlier, kind of tongue-in-cheek, what time of day? Well, I don't have a flippant answer to that. I have a mathematical.
That was a good answer. That was it. Now the other question is, can you tell me the price it's going to be at?
Let me get back to you on that one.
See what happens
I don't want to sound
take
too
medication
cute.
Properly.
Yeah. Hubris. There's got to be some there's got to be some humility, not hubris. Humility. I'm using the wrong word.
Yeah. Hubris is that stuff that the Jewish people eat on hors d'oeuvres and stuff, isn't it? No, it's hummus.
Yeah, there you
hummus.
go.
I got it messed up. Let's go ahead and talk about Treasury bonds because I'm short bonds. I'd like to know what you're looking at.
Well, let's take a look at bonds. Here is a long-term picture of bonds going back to 1940. I have longer-term data that I've shared with you and the viewers on the air here. I've found that bonds have a 40-year cycle that goes back a couple hundred years. The last trend change in that cycle occurred at the lows in 2020. Approximately 40 years prior to that, we had a high in 1981. 40 years prior to that, we had a low in 1940. Before that, there was a low in 1900. Before that, there was a high in 1860. So every 40 years, plus or minus 1 or 2, we tend to have major pivotal turns in bonds slash interest rates. We are heading higher. Now, it doesn't mean we're going to go straight up from here. We bounced off the 5% level on the 30-year, and we're doing some structural back and fill below that line. I think we'll probably stay below that line for the balance of this year, but well into the future, I think you're going to see interest rates move substantially higher, which means bond prices are going to head lower.
I agree.
Here
we go. Yellow. Oh, we have time. You just take your time. We've got how much time do we have? You just keep going. We'll stick with you.
Understood. Let's take a quick look at the precious metals. This is a monthly chart of gold traded on the COMEX in New York, or cash gold, doesn't matter. They all have the same pattern, same cycles. Every 94 months, I think you heard me mention that number before, on the stock market chart. That's Lucas 47 times 2. Spoiler alert, we got that cycle in gold as well. Every 94 plus or minus 8 months, we tend to have significant lows on the chart. The next low in that pattern is due ideally now, but that cycle has a variance of about 8 months. So between now and the next 8 months, and we're making all-time highs right now, I think we could push a little bit higher and tag the 2,500 level, and then I think the balloon might pop. and then we pull back, and sometime between now and about 8 months from now, I think we'll hit a major 94-month cycle low in gold.
Very good. Wow, that's really good. Hey, listen, I want to thank you for being our guest today because you really do a great job. It's Stan Harley at S Harley at Verizon, S Harley1 at VerizonNet.net, and his telephone number is 555. No, I'm not going to give that out. Hey, thanks for joining us, and tell your lovely wife I said hello, would you? Come and visit me, man. I like seeing you.
Yeah, my pleasure.
All right, Stan Harley, folks. We'll be right back with a few words from our sponsor.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, since we've had Stan on the line here, you notice we've made a 382 retracement here in the S&P up here at 5231.55. The high has been 27. So anything above 35 would make this a failure. But right now, the odds favor that could have a little bit of a sell-off. You notice the low that we made way back here. Looks like it's about a 1.618 expansion on the downside. Oh, look at that, folks. There's your low. There's your high. And there's hello, hello, goodbye, goodbye. That's 618, folks. 1.618, always a great number. There's your 382. Folks, next week, let me double check this because we've got, on Monday, we've got Bill Meridian. On Tuesday, we've got Norm Winsky. On Wednesday, we've got Grace Morris. And Thursday, oh dear, trying to get to Napoli on the line anymore, but it's pretty tough. Anyway, that's what we're looking at here. Also, try to do something for your neighbors. And especially send somebody over here to chop down these Palo Verde trees. I say that every year, but they're beautiful. Boy, they drive me absolutely nuts. So anyway, those are the things that we're paying attention to today. We want to thank Stan Harley for being our guest, as always, and it's always fun to have him on the air. So that's pretty much it, folks. So live every day in an attitude of gratitude, and may God bless. And my voice is spinning. I know I have time left, Al, but I'm not going to be able to. I can't do it. I'm just done for the day. That's pretty much it. So live every day in an attitude of gratitude, and may God bless.